Greetings everyone, this is Dwayne, CFRN. Today is Thursday, 18th day of April, 2012, and we're back to do it again. Now, this last trade right here, we didn't calculate that in last night. If you go back and watch the video, we did look at this one, but this one was just getting going, and so we didn't really tally that. So I'm gonna go ahead and show you what the skinny was. We had a bearish cross, we had a pullback. Okay, there's the pullback right there. Okay, 1385 and a quarter. The drawdown on the trade, 1386.75. It's late, I'm tired, and I really am going to use the calculator. Fair enough? Okay. 1386.75 minus 1385.25. Alright, so 1.5 point drawdown. As you know, we risk 2 points and only 2 points on these trades in these setups. Okay? So here's the entry, here's the drawdown, 1.5, and then price drops rather quickly to 1382 and a quarter. So from 85 and a quarter to 82 and a quarter. You know what? I can actually do that in my head. 3 points max potential. Okay. Now, this is an interesting scenario because I know you just kind of look at this and you go, that's another entry, and it is, okay. But I want to qualify why it is. Price pulled all the way down here to create this 3-point potential. Okay. All right. And then price opens way down here. So is there a pull away? Yes. Can you see it now because it all ran back in one candle? See, if this had been spaced out over like maybe 2-3 candles on the pullback, you'd have no trouble seeing the air, for lack of a better term. Okay, but as this candle was building and working its way up, there was air. And so was there in fact a trade entry there? Sure, there was at 1385. The drawdown was to 86 and a quarter, so the drawdown was 1.25. okay. And then what did price do? Price dropped down to 78 and a quarter. So let's go 1385 minus 1378.25, 6.75. $6.75. Now remember, I always have to throw this in. That's maximum potential. Okay? That's how far it traveled, not how many points you could get out of that. Your skill set, your nerves, that determines how many points you take out of a 6.75 point move. I can almost guarantee you, you're not going to take 6.75, and you're probably not going to take 3, maybe 2, maybe 2 and a quarter. And if that confuses you or fails to make sense, then come hang out in the live trading room and I'll explain it to you. You know, I'll answer all your questions so that it makes perfect sense. Okay, our next pullback to go short. Next entry, our system gives us a trigger over here. Price is telling, can't see it now because price has moved on, but when this happened, we had a nice little green box over here that gave us the exact entry price. And that entry price was $13.82. Okay. Have no drawdown on the trade. From 1382, we dropped to 77.75. 1382 minus 1377.75, 4.25 points. Okay. $4.25. Again, it traveled 4.25 points. Could you take 4.25 points out of it? I know you have to get tired of hearing me say that, but it's only fair that I point that out, because I mean, maybe you're astute and you understand that and you know that, or maybe no one's ever bothered to not pull the wool over your eyes, and so yay, I get to be that guy. Alright, our next short entry. And why are we taking short entries? Why aren't we taking any long entries? Very simple. The backbone of the CFRN indicator set, the CFMA1, is below the BBC. That's the green line. So we're going to sell the pullbacks. The pullback here is to 1380.75. Price drops to 1378.75. I can do that one in my head. 2 points. That's how far it traveled. Okay. All right. So, now what happens? Here's another pullback. You know what? I could have counted this pullback to this pullback and then this pullback here. I could have probably painted a picture of, let's see, from 80.75 to 79.25. See, I could have made this like a 2-point trade plus a 1. I could have turned this into 3.5 points, but I'm not going to do that. I'm just going to leave it. I'm just going to leave it at 2, because you see, from here it went to here, then it pulled back to here, giving actually another entry there, and then dropped here. But you know what? We'll just call it 2. Okay. All right. Now it pulls back again. Now you've had how many entries in a row? 1, 2, 3, potentially 4. And see how we're starting to squeeze up here? But we're not going to argue the point. We're just going to say, without any filters, without looking at any of the other indicators, it's a pullback, it's a bearish setup. System displays a price to go short. That price is right there. Come on. Ah, 1380.25. All that work just so I could say that trade got stopped out. All right. Price pulled back. You got stomped out. How much did you get stomped out for? 2 points. Why 2? Because we never risk more than 2 points on one of these trades. Period. Now we get a bullish cross. We've been going short all through here. Now we get a bullish cross. We're looking to go long. Okay. And where's our entry? Where's our trigger? Right there. 81. Now I got to move the arrow for just a second, because there was a drawdown on the trade, as there will be on almost any trade. From 81 it drew down to 80.25. 3 heart stopping ticks. Okay. Now it's easy to laugh about it right now, but when it's real money and the markets are flowing, well, you probably aren't laughing. All right. So bullish cross, pull back, entry is at 1381, right? Okay, and price goes up to 1384. That would be 3 points. Total travel. Total distance traveled, 3 points. You get another pullback right here. Okay, this pullback is 82.25, and price runs back right back up to 84. Okay, so from 82 to 84, what's that? It's 1.75. 1.75. Okay. And then price pulls back again. And it gives you an entry right. Let's see, it pulled back here, went to 175 here, so the next pullback would be right there. Okay. At 82.25. And it goes up to 84.75. So let's go 84.75 minus 82.25, 2.5. 2.5 points price traveled before it headed the other way. And so far, now remember we started at midnight, and so far we're only, because we have traders around the globe, okay? Not everybody trades just the Wall Street hours. We're only 45 minutes into the actual Wall Street trading day, or the Chicago trading day. Chicago trading day, we're an hour. Well, it's still 45 minutes. 8:30 Chicago time, 9:30 Eastern. Okay. So you get a pullback, goes 2.5, and you get a pullback to right here. And now remember, we always use what size stop? 2. We never risk more than 2 points. Okay? So the pullback entry is right there at 83.25. What's the drawdown on the trade? Ooh, 81.25. You see this? You get into the trade at 83.25, and you get stopped out at 81.25. Now, price doesn't have to trade through. Trust me, you're out. Okay? Now, look what happens. It turns around. It goes your way. It's a nice trade. But that doesn't change the fact that you entered on the pullback here, hoping for price to go higher here. But before it went higher here, it drew down exactly 2 points and stopped you out. Okay, moving right along. And during that stop out, okay, now follow me closely here. I don't want you to get lost. You get stopped out for 2.25 points. Price pulls back to right here. See, boy, you really need to come to the live trading room for me to better explain this. You were in a trade that you got stopped out onto the tick. A long trade. Then it throws you a short trade based on that stop out. I could give you 9 reasons to Sunday why you probably don't want to be in that trade, or might not be in that trade. But I'm not going to do that. Okay? You got short there. No filters, no one of our other indicators. You just got stopped out. Now let me ask you a question. If you get stopped out 2 times in a row right there, are you going to be able to take the next trade? Because see, when you look at the statistics, the numbers that people hand you, the charts and the pie graphs and the whatnot, and they don't tell you that, well, you know, my system can sometimes have 7 stops in a row, which you not only have to be able to weather psychologically, but your account has to be deep enough that you can weather that. Now that system, that hypothetical system, may be known for having 7 stopouts back to back followed by 12 winning trades on average over the last 1,000 setups. Okay? Now even if that's true and factual, do you have the gumption or the money to pull the trigger right here? It's a hard thing to do. Okay? Let me just tell you. It's a hard thing to do. It takes discipline. You got to work at it. You got to train yourself. You have to be very confident in whatever methodology it is that you're trading. Okay? And that set of data that you're handed, which maybe has, you know, like 1,000 trade setups over n number of days, you got to go through that whole thing. Would I have been available to take even half of those trades? And if I were available, if it were during, if in that sample, even half of those trades were during the hours that I trade, and I caught these 2 back to back, am I going to take this trade? I can't answer that question for you. Okay? Nobody can answer that question for you. However, if you don't take the trade, then it skews the whole data set. No matter how much time they spent mining that data, back-testing it, forward walking it, none of it matters. If your answer is, I don't know if after being stopped out twice in a row, I don't know if I really could step up and take this trade. And I'm not just saying that about what I'm showing you here, which is really just some basic price action. You got to ask yourself that about any system, any methodology that you ever seriously consider trading. You really got to get to know that thing. Okay? All right. Now we're just going to say that you do have faith in what you're doing. You've watched it long enough. You've put it through its paces. You've been in the simulator. You know, you've done your due diligence, whatever. And so you actually are going to put this trade on. Because if I start trying to factor in, well, you're probably not going to put, then I have a faulty data set. See, I'm warning you every step of the way of the potential pitfalls of any data set that's handed to you, even the one I hand you. Okay? If you're not available, it doesn't count. If you wouldn't have been willing to take the trade, it doesn't count. So don't get too carried away with the results that people love to show you. All right. Bullish cross. We got air. It's coming down. 1383 and a quarter. All right. 1383 and a quarter runs up to 85.50. 85.50 minus 83 and a quarter is 2.25. Really? Looks like more than that, doesn't it? 83 and a quarter to 85 and a half. It is what it is. 2.25. I guess I just got it scaled a little big. 2.25. I've got it scaled big so that you can see it easily. Or I'm up to something. You decide. Alright, so pullback is here. Entries at 83 and a quarter. Maximum travel is 85.50. Maximum potential 2 and a quarter. What could you have taken out of that? That's between you and your own nerves and intuition and stuff. Alright, if we can get this to sit on the line here. Okay. Pullback entry is here. Right there. A couple ticks of drawdown. But you don't get a lot of travel on this one. In other words, see, when that happens, you get this lower high. The momentum is weakening. And so, I'm not saying that you don't take the trade, but the fact that momentum does get weak here, you want to be in tune with that, okay? Because something's about to happen. The first thing that's about to happen is price is going to close back below the BBC. See how over here, from here all the way up, price above the BBC. Bounces, one candle, and then boom, closes below the BBC. That's a big heads up. And over here you get a bearish cross, really big heads up, okay? So price here pulls back to 84, goes to 85. That's 1 point. You know, is that a legitimate 1 point? Yes. But what's probably going to happen in the real world? If it were 1.5, 1.75, I'd probably mark it up. So even though this trade from our entry traveled 1 full point, I'm just going to call it a stop out. I could probably come up with something cool like a flat, or I don't know. I'll think of some creative marketing kind of a name. And that's a lot of trades, man. It's only 10 o'clock in the morning. Yikes. Okay. So, you went long here, and when it came back here, it stopped you out. So you're not getting long again here, because this is the place where you got stopped out. Let me make sure you understand that. There is no trade entry here, because this is the place you got stopped out. I mean, you didn't get stopped out really till down here because we use a 2 point stop. I will say this. Okay, your entry was here. It went up a point. And then all of a sudden you closed back below the BBC. Will we teach you in the live trading room to consider cutting your losses right there? We'll talk about it. Do you always have to let it run to the hard stop? You don't have to. But if you don't give it room, I mean, oftentimes we see a lot of times we get a drawdown of 1 1/4, 1.5, 1.75, and then it gives us a nice trade. So that's something you kind of have to work out with yourself. Okay, now something really terrible, ugly happens here, but it's the truth. Price drops nicely. Okay. Can I teach you how to use that little guy right there to be in a trade? I can. If you come take the free trial, I'll work with you on that. Because price dropped from 83 1/4, goodness, all the way down to 79 1/4. So is that 4 points? But it never gave us a pullback entry until here. Right? It got really close here. Getting closer, getting closer, getting closer. Now this thing's getting tired. I want you to look at this. Price has swung from 85 1/4 all the way down to 79 1/4. That's 6 points. The average swing in the S&P 500 E-mini futures is 3 to 5 points. So by the time the market has moved on the S&P 500 more than 5 points, 6 points in this case, you start to think about, we're due for some kind of a retracement here. Why? Because the average swing is 3 to 5 points. All right. So what are you going to do? Well, just based on the setup, you're going to go short, and you're going to get stopped out. A lot of trades today, a lot of stops, and guess what? We're not done. Okay? Was there a way to get something out of this? Yes. Am I going to teach it to you tonight? No. Come take the free trial. Become a partner. we'll talk about it. All right, bullish cross, pullback right here. The pullback is to 1381.75. Price runs up to 1383. You know, I'll give that the 1.25. It's more than a point. Okay. Alright. So we have a bullish cross, we have a pullback to here. Now there's a pretty good drawdown on this thing too. All the way down to 80.75. Well, it's only a point. You get a point of drawdown. Okay. And ultimately there's a total travel of 1.25 points. Okay. This is a situation where you could have managed it aggressively and got out at break even. Yeah, but yeah, we'll let the 1.25 ride. I don't do that too often, but I'll let that one go. Now, bearish cross, pullback. You gotta be kidding me. Really? I thought you said the song always remains the same. It does over time. But some days the rhythm is just a little out of step. Okay. This pulls back. Picture perfect entry. Unfortunately, price doesn't continue to fall. It continues to climb. What more can we say? Okay. The ugliness is not over yet. We get a bullish cross. We get a pullback to right here. The entry, 1383. You ever notice how those lines are like already there from back over here? Now there's a reason for that. And again, when you come take the free trials, cfrn.net/apply, I will strive to help you understand what that's all about. You notice a lot of times I don't even have to move the line. It's already right there. Yeah, there's a reason for that. Okay? Alright. From 1383, the total travel from the entry up to here is 1.25. Okay. Now, on you get a there's no, you know what, you know what, let's not. Today's total is not going to be so hot. Time we're done here. Alright, we finally get a bearish cross. We get a nice pullback. Oh, and wait a minute. Is that line already there? Right at the exact entry? How could that be? Again. Well, come hang out with us. We'll show you how it works. Alright, the pullback here is to 81.75. 81.75 minus 78. 3.75. $3.75 total travel from 81.75 down to 78, 3.75. Okay. Now, As much as it pains me to do this, there's the pullback. And there's the drawdown. Pullback's 80.50. Drawdown's 82.75. Guess what? You got stopped out by 2.25 points. Or did you? I didn't see this unfold live in real time. If I wanted to be a stinker, I could say that it pulled up here, opened here, came down here, then ran back up here. And I could argue that, you know, there was a 1.25 in that trade, but I think you know me well enough now. And you know what? We were really due for a day that didn't look like I made it up. Because days like this happen. They do. Everything's just a little out of sync. Just a little, not a lot. Okay? And can you get 2 days like this back to back? Sure. Any and everything is possible. And that's what you have to do. You have to embrace all the possibilities. Alright, I forgot to put the arrow there on that trade. Again, could you have gotten short here? And can we teach you how to have taken advantage of this move? Yeah. But that's outside the scope of this video. Okay. Alright, let's go count the stopouts. I may need the calculator for this. There's 1, 2, 3, 4, 5, 6, 7, 8. Oh boy. Eight-point stop down. Okay. Now that's if you were there from midnight until right now at 10:01 p.m. Pacific time on April the 18th. Chances are you weren't. So chances are you didn't get every one of those stop outs, but that's what happened during that entire time frame. Okay? That's exactly what happened. 4 trades, 8 points. Let's go through. Wait a minute. Did I get that right? No. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, okay. Okay. 8 trades. Stopped out. 4, 2 points a trade. 4, 16 points. 4 minus 16 points. Now that's without using any aggressive risk management. You know, you see it's going against you, you just go ahead and scratch it. No, I'm not counting any of that. I'm just saying you took a 2-point hit on every single trade. Alright, let's go add them up. See what we got here. Okay, you ready? There's 3, 6.75, 4.25, 2, 3, 1.75, 2.5, 2.25, 1.25, 2.25, 3.75. Man, that's a brutal day. Okay, but it is what it is. I think you've seen 10 days in a row that were, or 11, that pretty strong. So we've got 30.5. Now it would be really easy for this to be the one day that I do like the other guys and I don't get real. But I'm going to still get real. 30.5 points maximum potential. Did you have to have a losing day? No. You could have showed up here and got 6 3/4 points and been done, or shown up here and got 4 1/4 points and been done, or shown up here and got something and potentially been done. Or you could have caught something here, got stopped out here, caught 3 here, and been done. So how probable is this your reality? Highly improbable. Because remember, that means you started trading at midnight and you traded up until it's now 10:05 Pacific time on April 18th, and you took every single setup. No setups sprang up on you when you're in the bathroom or getting coffee or answering the door or any of that. Okay, so alright, you know what we're going to do. We're going to go 30.5 divided by 2 equals 15.25. Possible, which goes a long way towards offsetting your 16 points that you potentially got stopped out for, if you got stopped out for all 8 of those trades. I can almost guarantee you, if you're hanging out with us in the live trading room, you would have avoided some of those stops, and some of them you probably wouldn't have got hit for the full 2. But you know what? In the interest of integrity, I'm just going to paint it like it is. So, since I started this video series, this is the first day. Now, every night, I knock whatever the maximum point potential is, I slash it in half every night, right? Don't I? I'm doing it again tonight. 16 points stopped out, 15.25 possible points. So results on the day. Alright, keep in mind, very few people trade stem to stern. You have a couple hours a day that you really like. You have some filters, you have some indicators, you've got some weekly trading zones. But we're doing this raw, based on the price action, based on the setups. We had days where we had incredible strings of winners, one after the other, and we had some really nice trades today. But truth of the matter is, without filtering anything and without thinking about it, 1, 2, 3, 4, 5, 6, 7, 8. 8 trades stopped out. Now, if you hadn't seen the previous 11 or 12 videos where things really went quite well, you'd probably be going, I don't think that's for me. But you're in an enviable position right now because you have seen all those other videos. Because a trader is now faced with however this day worked out for you. Okay. Do I have the confidence to sit back down tomorrow and start pulling the trigger on every clearly defined setup? Again, Our price entries are always to the tick. No ambiguity. It's never nebulous. It's carved in stone. And then you either take it or you don't. You either take it or you talk yourself out of it. Okay? And that's the truth about trading. So, I want to remind you that trading is risky, that you can lose all your money, that you should probably seek the advice of some kind of licensed professional before you make any type of investment or do any type of trading. It's not just that the government requires us to put that on our website. I just think it's a good idea that you be made aware of that. See? You should know. It is risky. Trust me, if it were easy and foolproof, every fool would be doing it. Right? It takes work. Not only does it take work, it takes the ability to come back tomorrow after a potential day like this and go, I got a great attitude. I know that with a large enough sample size, the odds are in my favor. These are high probability setups. And as long as I define the setup, take the entry, manage the risk, by the, maybe not the end of the day, but by the end of the week, end of the month, end of the quarter, whatever your measuring stick is, the potential for your results to be very good are, in my opinion, pretty good. So, you're invited to come take the free trial. Just go to cfrn.net/apply. No credit card required, no obligation, no hard sell. We're a community of believers who trade for a living. We'd love to have you come and be a part of our community. We don't want any money up front. We want you to come and hang out. Watch us trade, listen to us talk, ask us questions, turn over the stones, kick the tires, all of that, so that you can make an intelligent decision whether or not becoming a CFRN partner is right for you. Maybe you're a lone wolf. Maybe you don't want to be a part of a community of traders, especially a community of believers who trade for a living. So we give you a week to really sort it out and to make the decision that's in your best interest. Because you know what, friend? That's what we want. We want what's best for you. God has been good to us, kind to us, gracious to us, and we want to share this gift with you. Okay? So check us out, cfrn.net/apply. I certainly hope to see you in the live trading room.